What's going on, everybody? In this video we're going to look over Senseonics stock, or SENS. I haven't talked about this one in quite a while. Lately it's just been kind of downtrending. Things haven't been looking that good, but I do have some things to talk about here. We're going to talk about a potential entry point on Senseonics. We're also going to talk about some news that came out a couple of days back. So if you guys like these videos, consider hitting the like, subscribe, ring the notification bell. It keeps me going. And let's take a look at what's been happening with Senseonics lately. Now, the most recent news on their investor relations page is how they entered into a loan agreement for $50 million. So we're going to look at this real quick, then we'll take a look at what's going on the chart, and we'll also glance at their balance sheet, although a few months have gone by since their last earnings, so it might not be 100% accurate, but it'll give us a good idea of where they're at financially. Now, getting into the last news we've seen on Senseonics, Senseonics Holdings enters into a $50 million loan facility with Hercules Capital. And with this $50 million loan facility, they mentioned that they also drew down $25 million upon the transaction closing, meaning that they drew down some existing debt, and we will look at that in a second. Now, as said by the CFO of Senseonics, the loan facility provides increased financial flexibility for Senseonics as we endeavor to help more patients with diabetes by advancing our product pipeline and continuing to collaborate with Ascensia Diabetes Care to build the Eversense brand and drive global patient adoption. And this year, we've made significant progress simplifying the company's capital structure and extending the maturation of our debt to support our growth plans. The Hercules loan facility strengthens our balance sheet on a non-dilutive basis and is currently expected to provide the capital required to fund our current operation plans to cash flow positivity. Now, the group head at Hercules says that Hercules is excited by Senseonics' differentiated Eversense technology and opportunity for penetration in the global continuous glucose monitoring market. We're encouraged by the company's recent progress in expanding their commercial footprint, increasing coverage, and advancing their product pipeline, and look forward to their next phase of growth. They go into how they can get a little bit more out of this loan, get some additional money based on them achieving certain milestones, which I kind of like the sound of that. This Hercules company is willing to give Senseonics even more money if they can achieve certain milestones. And they don't go into specifics, but they basically just say, revenue milestones and gross margin milestones. So if their revenue continues to grow, if their gross margins get better, we will likely see even more money provided by Hercules Capital, meaning less potential for dilution. Now, I wanted to pull Senseonics up from Yahoo Finance, and this is going to go over their last earnings report, basically where their balance sheet is at as of their last earnings report. So keep in mind, a few months have gone by since, and we're nearly at the end of this quarter we're currently in. So these numbers may have likely changed, but this is the last update that we've seen. And you'll notice that their balance sheet is still doing okay. They have 117 million in cash as of their last earnings report, that 46 million in debt, of which 25 million of that was drawn down from this recent loan facility they received. So it is nice to see that their cash is outpacing their debt still on their balance sheet. But let's take a look at the chart here. It has been falling pretty recently. Now, I do have a potential swing trade idea. Since we're very close to our all-time lows, or it looks like we're about to create new lows, I would set a stop loss slightly under this level. See if we see a bounce here, which I wouldn't be surprised to see. We are approaching oversold. And when you look at this pattern, we have either a cup and handle or a double bottom. So I do think there's potential that we'll retrace. That's why it wouldn't be a bad idea to set a stop loss just in case we don't. However, we could retrace and come and test the 50 MA. And we have seen something similar. We came down a little bit farther lower, and then we saw a big retracement. We might see the same thing here before potentially coming down and testing lows again. But if you were to try to play this on a swing trade, I think it wouldn't be a bad idea to set a stop loss. Right now, the chart is very bearish. We are under the 250 MA, and they are in a bearish order. And they have been for the majority of this bear market. Once we saw our death cross back in January 2022, we have seen a bearish chart this entire time. So I do have a long-term position on this stock, a very small position. It is very high risk, so keep that in mind. However, I personally don't think now is the time to sell yet. Sure, it may go down lower in the mid to short term, but we are looking at soon the Fed turning around, the Fed not raising rates any longer. The market's actually expecting the Fed to pause despite us seeing higher CPI data and higher inflation metrics all around. PPI was even a bit higher too, but the market's expecting the Fed to potentially pause. And I do think once it's certain that the Fed is, done raising rates and we're getting to where the Fed is cutting rates, this will help a company like Senseonics that is pulling out debt at high interest rates. And this should help the stock price because Wall Street will see the Fed cutting rates as a positive for small caps, meaning a lot of these companies won't have to dilute as much, and then they can pull out debt instead of all that dilution that we've been seeing with a lot of these stocks. One more thing I wanted to add is earnings is around the corner. Our current quarter ends in September. It's going to be reported in November, but what they're expecting is a $5.6 million revenue estimate, which isn't necessarily an all-time high in revenue, because we did have a quarter where it was estimated to see 5.4 million. They reported 5.6, and I think that's part of the reason they're expecting this 5.6. Hopefully they beat it. They do have a track record for beating their revenue estimates. I'd say they have about a 3 to 4. 3 out of 4 revenue estimates do get beaten, which is a good thing. So as long as they can beat that 5.6 million, they will see a record quarter for revenue. So they are still slowly but surely headed in the right direction there. And it is very likely that when their earnings comes out, we will see a year-over-year revenue increase as well as quarter-over-quarter revenue increase, which is a good sign for the stock. But keep in mind, it is still extremely high risk. They are unprofitable, and I really want to see more adoption of the Senseonics CGM. Now that they're covered by more and more of the largest insurance providers, we should see just that. But let me know what you guys think. Is Senseonics going to make it out of this bear market? Are we going to finally see that revenue ballooning like I've been waiting for? If you were to ask me back in 2022, where would Senseonics be revenue-wise, I would have said at least over 10 million. So it is a bit disappointing where revenue is still at. It's just slowly kind of floundering around, to be honest. But it would be good to see a record quarter for revenue, indicating that things are slowly but surely going in the right direction. And they do have the cash balance and the money they need to make it through this bear market, in my opinion. It's really just a matter of them finally getting to that profitability, which still really isn't in sight yet. We still have a long ways to go, in my opinion, until we see consistent profitability. But I do think one day we will see Senseonics as a profitable company. However, there is still quite a way ahead. Now, what say you? Do you think Senseonics will hit profitability? Do you think they'll go bankrupt and get delisted? Is this too high risk for you? Let me know down below in the comments. Remember not to put all your money into one small cap risky stock, and keep a small percentage of your portfolio overall in these small cap high risk stocks. Just because I don't talk about stocks like Amazon and larger caps doesn't mean I don't have positions in those. So just remember to diversify. This is my reminder for you to not go all in on these small caps. I've seen across many message boards people just going way too heavy into these and then really regretting it as time goes on. So just keep a level head. Don't go all in into any one stock. And for these riskier small caps, I suggest keeping your position size relatively small. But in the end, it's your money. It's up to you however heavy you want to go into these smaller caps. My overall portfolio is probably about 20 to 30% all in on all of my small caps I have, with the rest being larger, safer stocks. But thanks as always for watching, guys. Let me know your strategy with small caps. How much do you put into your portfolio of small caps, and how many stocks do you have in total in your portfolio? Thanks as always for watching, guys, and I'll catch you later.